Okay, you guys, thanks for joining today. We're doing a recording here as well so that we can come back to this information, or for those that missed it. So I'm going to give it just a second here, see if anybody else jumps on before I get going. It'll be a pretty short class, but a couple of fun updates and just sharing some things because I know we've got some newer people in the Market Center as well. So this will be fun. It's very echoey where I am, so hopefully it sounds okay. Hello, Mary. Okay, folks, so we are a minute in. I'm going to go ahead and get started. So hello, my name is Tonya Sample. Everyone can hear me okay? Awesome. So thank you for joining us. We also have Mary on the call with us today too. And so Mary and I are a team. For those of you that don't know, I focus primarily on the mortgage loans themselves, getting folks approved, getting them to closing, all those fun things and working through numbers. Mary is my sidekick, and she gets to have the fun role of playing with marketing stuff. So you'll see a lot of updates come out from her. She may be talking about different loan programs or just fun co-marketing things that you can do to engage with your clients or sphere on social media. And so her and I work as a team on that effort. Some people that you don't typically see behind the scenes are Jeff and Chelsea. So just to introduce the team here, obviously you've met Mary and I, but folks that you may not get to meet in person are Jeff Anderson. And so Jeff is my loan officer assistant. Jeff has been in the business longer than I have. He is fantastic. And so what Jeff does is when we have a new contract underway, he helps me get all of those third-party items moving and ordered and make sure that the client file is orderly and continues on the process. We do have an on-time closing guarantee that we close our loans on time. And so he is a big piece of my behind the office group that helps make that a successful operation. So if you are in a transaction with us, you will either hear from Jeff on the phone or maybe see emails from him as he's communicating with us and the client. So all of us working hard to get us to the closing table. The next person there is Chelsea. And so Chelsea is my processor. Chelsea, her position is really to be between myself as the loan officer and the underwriter. So Chelsea's job is to make sure that when our appraisal comes in, our title work, our tax transcripts, all these things that some of it you care about and some of it the client cares about, but we care about all of it. Lots of third-party items and that we have to do checks and balances with to make sure that information was given accurately, and that I did my job too to make sure that I got that person qualified for the right program. So when we go through, I have company. I didn't realize that was going to happen. Of course it would while we're live on a call, right? But anyway, so whenever we go through the process, the client will also be in communication with Chelsea as well. And she is helping us obviously get to that closing table. So she's going to be sending out the closing disclosures for those final signings, helping me get the balance numbers with title so that our client knows exactly how much cash to close they're bringing on closing day. So sometimes they're not bringing anything with these programs we have these days, and sometimes they're selling a property and just transferring funds from one to the next. So anyway, so that's the team. Next, getting qualified. So the application process is super simple. I say it's never too early to get qualified, and we have some people that found a house this morning and want to get qualified this morning, but they haven't done the application yet, right? So we sometimes have those and we can get those moved through super fast. We may even have somebody that wants to buy within the next couple of months. And so they're planning and putting those processes in place in an orderly fashion. And so we get them through and get them qualified. Now, we also have other folks that are looking out to a year. Maybe they're a year out or even more than 6 months. And really, they just want to find out, I don't know if my credit is eligible. I don't know if I can do this. They just have a lot of questions. And so going through this application just sets them on that pedestal and gets them ready. So they feel very comfortable and confident moving forward into that next year. Maybe there's credit repair things that they need to do. Maybe we need to talk about job stuff. Maybe they're self-employed. And so anyway, so there's a lot of different conversations that are had, but just getting them prepared for the process to find that new home. So we have got the process of getting pre-approved. And so that is easily done right on my website, tonyasample.com. They have to provide income and assets. So bank statements, pay stubs, tax returns. If they've had an event, let's say it was a foreclosure, short sale, bankruptcy, there may be other documentation that we need as well. So that's that piece of information. And then, okay, understanding options, just what do I need? Going into the mortgage process, it's scary because it's uncertain. It's money. We think we have to have 20% down. We don't. There's a lot of different things that people are just uncertain about whenever they're going through this. So when we do the application, what I do is I schedule time with them. If we're meeting in person, maybe we're doing Zoom. A lot of times it's just over the phone, and that's totally fine too. But they want to understand, what can I qualify for? And that isn't always what the max is. It may be, you know what, I only want my monthly payment to be $1,500. What price range do I need to be looking at to make that happen? Well, it's not just the price range, it's the program that they qualify for. So these are all things that we take this person through so that they understand, what kind of program can I qualify for? Can I qualify for both, but is one better than the other one? How much money do I need? Can I get a gift? Can I use 401k? What about all these assistance programs? What about all these first-time homebuyer things I hear about? So those are some different conversations that we have. But really setting the expectation. So it's not just the qualification, it's painting the picture of what they're going to expect from beginning to end. So the conversation that you have with them as their agent, if they're selling a home, buying a home, their first home, a cabin, whatever it may be, you're going through that buyer's consult with them to prep them, to let them know this is where the market's at. This is what you're going to, expect when you go out. This is the search I'm going to set you up on. You're going to be setting expectations as the agent. Was the lender, I'm doing the exact same thing. So I'm going to copy what you say, most likely about the industry, the mortgage, the market, the housing, the seller market, all these things, right? So we're going to be having very similar conversations, which is going to be really helpful for that client to understand that piece and realize that, oh yeah, so-and-so said the same thing, so how we mirror each other on that side. But having those conversations about what's going on out there, once we find a home that we want to put an offer on, what they need to do, super simple. Somebody just needs to let me know what the property is and what we're looking at for the offer. Sometimes we have clients that are really tight on their numbers. And so I need to say, this is the max that they can do on this property to make it work. So once we're putting that offer in, what they should expect and getting me the property information or you as the agent. And then once the offer is accepted, what to expect from that day until the day that I take over ownership. Now that window, there's a lot of things that are happening, but that's not necessarily the end of it. So we're still in communication with the client even after closing because they are getting their mortgage statements from New American Funding, which is super fantastic because we don't have to worry about service transferring. You may hear, or maybe you've experienced where your loan's been transferred on the servicing side. So it's going from one lender to another. New American Funding, we actually retain the servicing of our own loans. So not only do we fund them, but we also service them. Part of that servicing is that we also brand you. So for the term that they have their loan with New American Funding, you as their agent are also going to be branded on the invoicing to them monthly. Whether that's a piece of paper that they get in the mail, or if they've decided to set up electronic, then they can also get that electronically. We also, for the life of the loan, are marketing our agent partner as well. So if you are the buyer's agent, you are being marketed to that person for the life of a loan. We think it's very important, just as you do, to keep you in front of those clients with key things that are happening in the industry. So if you are a client of ours right now, you know what I'm talking about. And if you're not, we would love for you to be. So if you have questions about mortgage things, I'm here for you. Please reach out. We'd love to help. And then market updates. So here's a couple of things that changes and some other strategies too with the seller's market that we're in. So first off, FHA, if you hadn't seen on my social media, and by the way, if you're not following my social media, I highly encourage you to do so. We put out a lot of really awesome content on Instagram, Facebook, and LinkedIn as well. And it's really just market updates. A lot of these market updates are things that you can share. You can share my page. You're welcome to do that and make your own notes and call to actions, for people to reach back to you with questions. But also Mary does a fantastic job with some different co-branding things. And so those are items that we can have created for you so that you can post socially. A lot of the social posts that we can help you with, we also can help you with the wording or talk you through the hashtagging and things like that if you're not quite sure what to do there. We have helped many of our agent partners in building their business on these platforms, and it's something that we really love to do. So we're not necessarily buying leads and handing out, leads to you, but we're teaching, helping guide you on the, how do I build my business organically yourself. And so those are the ways that we want to support you so that you are always catching the fish. So anyway, some different market updates. So first off, FHA is one of the things that we've been sharing a bit on social media. One of the big changes with FHA has always been making changes since I've been in the business, which has only been 12 years. But anyway, so since I've been in the business, what I've noticed with FHA is that it usually changes, and it kind of changes almost for the worst for the consumer. This change that has happened has actually been for the better. And this particular change is with student loans. This was one of the big things a couple years ago with student loan changes and qualification that knocked a lot of our clients out of the market to be able to buy until they could go conventional. Conventional had actually lightened up on a couple of their products where these clients were able to then transition into that. But if you have people that are like, you know what, I really got a lot of student loan debt, this new change with FHA might be the ticket. So let's say that I have a slew of student loan debt. With FHA, I was having to use 1% of the student loan debt against me if it wasn't reporting a payment. And right now, everyone's in deferment, right? I don't think those are coming out of deferment, I think that they did September of this year. If someone knows the answer, if that's different, I would like to know about that. If you have student loans and got any kind of information updates from the government on that. But it was 1%. So now FHA has moved this, and we're effectively only having to use 0.5%. As a lender, I can tell you that that's huge. If we have $100,000 in student loan debt, that is a ginormous payment that just got cut in half. And it doesn't mean that that's what they're paying, because when the loan is in deferment, we had to use this 1% with FHA. Now it's only 0.5%. So what was happening prior to this change is we would do what we could to get that person qualified conventionally. Well, if that person has a lower credit score, we may be able to get them qualified, but two things. One, the interest rate would have been higher if their credit score would have been higher. to the mortgage insurance. The mortgage insurance is also going to be higher for them if they have a lower credit score. So now what this does is it opens them back up into that FHA market. Now, is FHA a little tough to get accepted? Maybe, but I think a lot of that can go into our offer and our conversations that we're having whenever we're doing negotiations. And also when we're in negotiations, I also would love to have the opportunity to also reach out to that listing agent and help support that offer for our clients. So I'm there with you in the trenches to get this done. It's very difficult to get an offer accepted simply because of inventory levels right now. So I do think that we all need to be in on this and getting them to the finish line. Again, that's also part of that approval process too. So important. We do not want that loan to fall apart because someone's not really approved. It's very important. So anyway, so FHA has made that adjustment to the student loans, and that is huge. This is something that if you want to market any of this, we have some fantastic marketing pieces. You can go ahead and put a note in the comments. Mary is on and she can go ahead and follow back up with you, or just shoot us an email and we can talk to you more about if you have clients specific that you want to review with and things like that. So anyway, that's FHA. Now, conventionals made some adjustments as far as some different loan to value and debt to income ratio items. So loan to value still minimum 3% is what the minimum down payment is going to be. But the debt to income ratios can go up a little bit higher as long as we have some good compensating factors. So that one's not too huge, but it's still, it's good enough. So I guess with that is, if we're not able to get approved somewhere with another lender, I'd love to even be your backup person and take a look and see if we can't help that party out. Just over the weekend, we have an agent that is in our market center that did run into this. His client is pre-approved, and then they ended up finding out that they wanted him to put more down. So he reached out and just said, "Hey, G, I think you can help with this." We ran it through, and so now we're moving on with his application to get him closed on his new condo. So not all lenders are created equal. One of the things that I very, very much love about New American Funding is the opportunities that we have with loan programs. There is not much that I can't do. I mean, we just have so many great programs, and we don't have a lot of overlays and limitations to what we can do, which is fantastic. So again, if you have someone that was in a situation where they're just not able to get that financing to go through, reach out to me and let me see if I can help get that to the closing table for you. Lastly, the last one I want to talk about is mortgage insurance. So we recently had a class just discussing, how can we leverage our offers in today's market. One of the things that we can do, because appraisal gaps are, contingencies with the appraisals, that's a big deal. The market values haven't caught up to the supply and demand. Is it getting better? Yeah, but we're still going to see issues with appraisals. Especially I was talking with another agent this morning, and he said, "My goodness, we had an offer go over 100, I think it was 125,000 over asking. That's a lot." And of course, these people are going to pay that difference. But so the reason I have mortgage insurance on here is, let's say that we have a client that is going to do 20% down. Let's say that they have a $10,000 appraisal gap on their contract, and the appraisal does come in low, and they need to use that $10,000 to cover that appraisal gap. There are things that we can do with the mortgage insurance, prepaying the mortgage insurance on that loan, so that the client essentially is still paying the same amount of money out of pocket, and their mortgage payment isn't very much more. So there's different strategies that we can do and out of box thinking where we can play with mortgage insurance to help accommodate these appraisal issues for people. A lot of folks don't have that extra money to make up that gap. So maybe we have to adjust the loan to accommodate for that. So that's something else. If you have questions on how we can make that work, obviously reach out to me. My cell phone is pretty much plastered everywhere. You can just search my name and basically find me online. But we will go ahead and we'll send out a little follow-up to this as well. Mary will send out an update with a couple of items too. So my information will be on there. If you don't have it, it's also on the roster as well as Mary's. If you don't know us well, you will come to find out that just like Keller Williams being a big training company, we also provide a ton of training. This specific basics of branding that is coming up is being instructed by Abby. You may have seen Abby in the past doing trainings. She hosted some pretty awesome Instagram classes. This one is in person. This is just for branding. If you are new in the business or just looking for some refresh or how to, I don't know, keep fresh, let's just say, I highly recommend you participate in this class. It is on July 21st. It's at the Brookview Golf Course. We will, when Mary sends out an update to this, we'll go ahead and put that invitation link if you want to click and go ahead and sign up, because the spots are limited and I'm not sure exactly how many are left. So this is something that New American Funding is putting on, and it's an open invitation to you. It's also free. So that's pretty fantastic. But you will see where we do a lot of these kind of events, not just in the market center, but big statewide events in person and also Zoom. So that's that piece. So anyway, so that is really it for today. I appreciate you guys very much jumping on here and joining me for this class. And I'm going to go ahead. If you have any questions, I'm just going to open it up for a quick second. If you have questions, go ahead and throw those out. And it's silent. So that's good, I think. So you guys, again, thank you so much for joining us today. We will record this. Reach out to me if there's anything that I can help with. Or you have loan program questions for your clients and stuff. We'd love to be a resource for you. So have a wonderful day. Keep an eye out for that email from Mary, and we will see you soon. Bye.
Tonya, I'll be reaching out to you in email in just a minute here.
Okay.
All right. Unless you're at home. All right. That sounds good. All right. Thank you.
Okay. I'll see you in a bit.
Yeah. Bye.
Bye. Thanks, Dan. All right. Bye, you guys.